If you haven't been watching what Jerome Powell has been up to lately, don't worry. I've got you covered today. Spoiler alert, the man finally blinked. That was perfect timing because I'm pretty sure that the words just said, I've been missing you. I've been missing those low interest rates, right? The Fed decision recap, you guys, all right? So what happened last week? The Fed cut the rates by 0.25%. Okay, so that's bringing the federal funds rate down to 4% to 4.25%. You guys, this is the first cut since December 2024. Powell hinted we might see 2 more by the year's end, but only if the numbers behave. So be good, numbers. All right, so why the shift? Well, the job growth is slowing, unemployment is ticking up, and inflation is down about 2.9%. Still above their 2% goal, but not as scary as it was. And the Fed is basically saying jobs matter more right now than squeezing out that last 0.9% of inflation. Okay, Powell's message, he called this a risk management move, which is Fed speak for we don't want to crash the economy while trying to save it. Translation, they're cautious, they're hedging bets, and they're keeping the door open for more moves in November or December. What's next? All right, the next Fed meeting, November 5th, 6th. Okay, so between now and then, watch the job reports and the inflation report. Those will set the tone for the next decision. Mortgage market reality check. Here is the fun twist. Mortgage rates didn't tumble after the cut. Shocked, right? They actually nudged up a bit. On Fed Day, the average, by the way, that was on the 17th, the average 30-year fix rose about 9 basis points and then added another 15 basis points the next day. Why? Because the cut was widely expected and already priced in. Okay, mortgage rates follow long-term bond yields like the 10-year treasury, and those yields jumped. Still, the big picture is better. Rates today are about 0.70 lower than January's high of 7.04. I know those of you that are like, I'm going to wait. Well, this is your chance. Okay, and roughly 1.5% below the October 2023 peak. Freddie Mac's latest survey shows the 30-year fix sitting around 6.35%, which is noticeably better than where we started the year. So what are the experts saying? Well, the experts, they can't quite agree. Shocking, right? So Chen Zhao, at Redfin, basically says, don't expect a crystal clear path forward, just more uncertainty. Great. Yuval Golan at Waltz thinks that we've already gotten the bulk of the rate relief this year, so don't hold your breath for much lower. And Nadia Evangelo at NAR is the most upbeat, saying rates could slip towards 6%, which would open the doors for millions more buyers. That's going to be a fun market to enter into. For millions more buyers and give sales a nice bump in 2025 and 2026. So basically, one's struggling, one's pumping the brakes, and one's saying, bring on the 6% rates. What does this mean for you? Buyers, inventory is up and rates are lower than they've been in a year. If the rates dip further, yes, your buying power improves, but thousands of other buyers will also jump back in. That means more competition, bidding wars, and the risk of overpaying, okay? And let's be real, prices never really dropped last year. And a lot of buyers who sat on the sidelines waiting for the perfect moment ended up paying more because prices kept climbing. The takeaway, waiting doesn't always save you money. Okay, sometimes it costs you, and that's not fun either. And since I know you're probably asking, where's the crystal ball here? Well, here it is, okay? Buy now while the interest rates are lower, and refinance later if and when they come down further. Make sure you can afford your repayment now, though. But guess what? Clients of mine who bought last year or even earlier this year, you guys, they're already on the phone with the lender trying to refinance. Imagine if you had taken that leap and you were already saving money and getting equity instead of still waiting on the sidelines. Okay? Your only competition then is a quick call to your lender. That is way better than a panicked call to your financial advisor asking if you can swing $100,000 over bid. Sellers! Here is where this ties back to you. The buyers who've been waiting for rates to dip are finally coming off of the sidelines. That means more eyes on your listing, more motivated buyers touring homes, and yes, more of those competitive offers that you have been hoping for. But also, listen to this. This could be your moment to upgrade into that dream home that you've had your eye on, or downsize to free up your lifestyle. But price it right, present it well. Yes, staging does matter, and you're likely to capture those buyers before the next wave of competition makes things trickier. Or trick or treat into Halloween? Trick? No? Okay. Overpricing though, still the fastest way to end up with crickets and price cuts. So Powell made his move. Rates are down a quarter point and the market is cautiously optimistic. Will this be a repeat of last year's cut though? You know, cut now, regret later? Maybe. But here's what I know. Buyers and sellers who act strategically today will be glad they did tomorrow. Man, that should be like a bumper sticker or something. Okay, so if you're thinking about buying or selling, now is the time to talk strategy. I am happy to help. And hey, don't forget to like, subscribe, and share this video with at least 3 friends, or your dog, or your barista, or that neighbor who mysteriously knows your Wi-Fi password. What? That's not cool. Or the neighbor that just like looks right over your fence, you know? Name that show. All right, you guys, I hope you have the very best Monday and an even better week. And you know what? I'll see you soon. Peace.